when you start a business that's going to act as a partnership or have multiple members, you should really lay out, here's my plan to get in, and here's my plan to get out. So it's all laid out, so in a year from now, when you decide, hey, we can't work together anymore, your exit strategy is figured out before you get in. You know, I, years ago, had a quasi-partner, and it really did not work. I hadn't officially made him a partner, but it just really didn't work. The chemistry wasn't right. Things weren't working the way I wanted them to, and I had to get that person out of my business to continue to be successful. And I didn't have a plan on how I was exactly going to do that. And I think going in, if it would have been, here's what you need to do. If you're not doing it, you won't be here. If I had that laid out, and this is probably true of even employees, if you have, here's what your employees are going to do. If you're not doing it, you're not going to be here. So we all understand the rules. It'll make your life a lot easier.
So you think a really solid job description and performance of duties, maybe document for each employee, would be beneficial to
That's
businesses?
beneficial, and then, like I say, a documented partnership plan and an exit plan in that partnership plan is, I think, crucial to having a partnership. Unless you're partners with your spouse who's not going to leave you, maybe.
I tend to disagree. I think it's even more crucial to have that exit plan built in if you're working with a spouse.
Right, and maybe even more crucial in that case to have a communication plan to say, okay, well, when we don't like each other because somebody forgot to let the dog out, then how are we going to talk in business? And that's probably
having worked with the spouse, it's trust and believe, absolutely critical. So we're going to kind of bounce all over the place here.
That's okay.
So next year's an election year.
Okay.
Did the last election year affect your business? And do you think next election year will too? Just the whole
and
I don't care what political spectrum anybody's on.
It's a very good question because I started in 2007. Business really started going in 2008, right after an election. I grew a lot during those years. And I'm like, okay, is it the case that small business owners are afraid of what the government might do to them under one political party versus the other? Or not, you know? And finally, you know, it kind of came to me, and I use this a lot, is really you should try to grow your business so it doesn't matter. It doesn't really matter what rules they put in place for us. It doesn't matter what party's in office. It doesn't really matter what's going on. We're going to build our business to be strong enough to sustain either one. So I don't know that it affected me. I feared a little bit that it might. I don't know that it affected me. You know, one of the big things that happened specifically in my business was easing some of the tax laws that made doing taxes for some people a little bit easier. And I feared that might cut my tax business, but it's actually done the opposite. My tax business has gotten larger because it's different and it's new. And so I've kind of built my business to withstand either one. And I think living with the fear of somebody from a different party is going to get elected is not a fear you should live with. You should be able to grow your business beyond that, I hope.
So business should be not politically based, primarily. Your business should be your business.
Right.
And the political or governmental structure around it should affect it as little as possible, and you should build it that way.
You should build it that way, you know, right.
Okay. So how and why do you track your cash flow? You said you were bad at that. You had some issues. And why is that important?
Well, I think cash flow is really important. You know, and I've addressed it a couple times here. Mm-hmm. One, I wasn't watching my cash flow to say, oh, I need to put money aside for taxes. One was I wasn't watching my cash flow enough to say, oh, I need to take $30,000 out of this company. And so really, when you get down to cash flow, watching that or knowing it allows you to make decisions. So you really kind of have to know what your cash is going to do. You know, we get a huge influx of cash during tax season, which is great. Being able to go through the other 8 months of the year when it's not tax season is a challenge. And so knowing that, hey, I'm getting this huge influx of cash, I should have a huge influx of yearly expenses come in that period. Being able to plan ahead and know where I'm at and know that, hey, if I take $2,500 out of the company as a distribution today, it's not going to affect next month. All those things are important just to know where you're going and to make smart decisions.
What piece of, I'm trying to figure out how to put this. So money has a cost based on when you're going to get it and how you get it, whether it be a loan, a credit card, right? Or whether it's an account receivable that's got like a net 45.
Mm-hmm.
How do you help your clients understand the cost of money? And I know that one's a hard one because that one's a little different, but that term has come up a lot.
Mm-hmm.
In a lot of the discussions that I've been seeing online here in the last 6-7 months. And there's always a cost of investment. There's always a cost of money, whether it's labor, whether it's time, whether it's product, whether it's an interest rate. How do you help your clients figure out whether it's a worthwhile cost and how to judge that?
It's kind of a couple pieces. So it's one, figuring out, and I have a manufacturing company that I work with, figuring out if the cost of delay to get paid is going to allow you to keep doing what you're doing. This company struggles a little bit from month to month because they do have that long term. And it's like, okay, well, we can't do the things we need to do operationally because that term's too long. So their cost of money's too high. And so one of the things I talked to them about was doing some creative things with invoicing or getting some rapid payments on some invoices or taking deposits on jobs or, just a variety of options to shorten that time frame from having a job and getting paid. Other options we look at, and I've done a little bit of this myself, is, hey, if I have, a bunch of debt on my balance sheet, who really owns my business? And the accountant that works with me and I've sat down and talked about this the last couple of years. It's like, okay, if the business is carrying a bunch of debt, who really owns it? Am I working for myself or am I working to pay the bank? And so that's something that we've worked on internally over time. And so let's get the business in the healthiest, strongest position possible so that we can withstand. Because what can happen is that cost of money can literally put you out of business, because I can't buy materials for my next manufacturing job because my first manufacturing job hasn't paid. So it's really kind of watching that money and how it goes and deciding if that cost is something you can afford or want to afford.
Okay. So. Well, I knew that was a big one, because a lot of people that are just getting into business and entrepreneurship, they go, hey, I made a sale, or hey, I did this, and hey, I did this, and they know they got money coming in.
Right.
So they're excited, but they don't think about, like I was having a conversation with the lady online, and she's got a side hustle, and her side hustle is selling jewelry. And her biggest problem is she doesn't have enough money to stock the inventory that she's selling, because there's a lag there.
Right.
So she and I watched this happen over the course of a couple of months, is she got really excited, making a lot of sales, selling her inventory, but the payments aren't keeping up. And so now she's trying to figure out how to get the money in to keep the inventory in to keep selling. So it's something you have to keep an eye on. It's one of the things that will knock a business out really, really quickly is, you have to understand the cost of money and the cost of money in your business, which is why I didn't have that one written down, but it came into my head and I figured I had to roll it at you.
Right. Well, and something that we look at too is, what options do I have? Do I take money out or use my credit card to buy inventory where the interest rate might be 15 or 25%? Or do I do my very best to build my personal credit so that it's high enough so I can go to a bank and say, hey, give me a little 5% line of credit and I can keep it paid off most of the time, but in the months I can't, that cost of money is a lot less. So.
Yep, yeah, that one was just... So, what's your plan for the future of your business? Where do you see it going?
Well, I'm sometimes shocked by where we are and sometimes think this is going according to plan. So I've kind of built my business to never stop growing. My business is now pretty systemized. Probably my biggest piece of current business is getting my business to operate without me doing any of the lever pulling or any of the knob turning. And I think if I can get it to that point, we should continue to grow. We've got a satellite office in 2 different little towns, Seward and Crete. We now have somebody who's living in Iowa who's going to potentially take on some clients over there, working under our same umbrella and working for us. And so I really don't see there being an end to small businesses needed help, even in Lincoln. So I kind of see us continuing to grow and working on our leadership and management so that we can do it without me being a doer anymore. So that's really what my immediate future is.
Okay. And because you mentioned it earlier, and because of what I do for a living, do you have an exit strategy?
I think it's important, and I thought of this some this morning in my interview prep. I didn't get any of the questions, but one of the things I'd like to talk about is whether you plan on selling or not. Jethro and I have talked a lot about someday maybe I sell Money Smarts and move on to something else, or I retire. Optimally, I build my business to sell whether I do or not. I have a 10-year-old that keeps telling me he wants to be an accountant or a math teacher. So maybe in 10 more years he says, nope, accounting's my thing and I want to take over, and that would be great. But between now and then, I'm building this business to sell. If something happens to me, my wife's going to have something she can sell. If nothing happens to me, I have something I can transition to one of my kids or a key employee that's worth something. So my business is the majority of my retirement plan at this point, so that someday, and I joke around, that I can be the guy who comes in and just drinks coffee and annoys the employees for a couple hours every day, and then I leave and they get a bunch of work done. If I could be that guy, that'd be okay too. And so what's going to allow me to do that is every day working to build it to sell, whether we actually get to that point or not.
Okay. And then the harder version of that question.
Okay.
You drove here to my office to do this video. If on your drive back, a semi slammed into your vehicle and put you in a coma for 9, 10, 12 months, do you have a contingency plan for what happens to your business if that happens?
We need to have a written out contingency plan. At this point, my wife knows key individuals to call, one of them being Jethro, and we've talked about it in the past if something happened, or if I wasn't here, what are the steps? You call Jethro, here's the insurance guy, here's somebody who can fill in while I'm gone, you can replace me. One of the things that we've talked about, and I do have, is I have life insurance that the company buys so that if something happens to me, they can pay to replace me with that insurance money. I have life insurance to cover the building. If something happens, it pays off the mortgage. I have life insurance for my wife and my family to do things on the personal side too, but I always try to have those pieces in place. Now, what I don't have, and what we've talked about for a couple of years, is the actual written, here's where the knob is to pull, here's where the lever is to, flip, those kinds of things. And I think that's really important and something I've worked towards. I've worked more on putting the pieces in. And my wife and I have talked, I think last year, and I don't remember what the deal was at that point, but I said, okay, if something happens, you call Jethro and he will sell the business. And one of the things we do is about every other year, if not every year, we get evaluation.
Yep.
So we know where we're at. And he usually gives me okay, Russ, if you're dead today, it's here. If you can work 2 more years, it's here, And so I can make decisions based on that, and we know how to handle it. So.
Yeah, it's probably one of the biggest things. Helping people buy and sell businesses. I deal with a lot of people that aren't quite ready yet, and it's probably the biggest piece I touch on is it's your catastrophe file. Every business owner, bar none, hands down, for every one of their businesses should have a binder in their office that if they died or got crippled now, someone can walk into that office, they can pull that binder out, and it has the contacts of everybody, who they should call, where it's at, what needs to be done, and go. And the people that I've helped build those for, I think, are some of my most valuable contributions. Not just get paid. The people that it will save their business in a catastrophe. And I push all business owners to do it just because I think it's critical. I have it, my partners have it, I push Russ to put one together, it's just important. It's like life insurance. You want to take care of what you built, especially if you're gonna pass it on. So that's the end of my ugly nuts and bolts questions. I've got a couple of them from people that have specifically reached out to me and said, ask this person this question. So,
All right, we'll see.
how do you know as a business owner if your accounting firm is doing a good job?
Relationships. Absolutely 100% relationships. I often get the question, well, I feel like I should have been able to do this. I feel like I should have been able to take this write-off and they wouldn't let me. Typically, one, in my mind, I don't discount the accountant. I maybe discount the relationship. If you feel like you should have been able to write something off and you don't have a good enough relationship with your accountant to get it explained to the point that you understand it, then there's not a good enough relationship there to stay. It's a little bit of the teacher in me. I aspired at one point to be a math teacher. A little bit of the teacher in me, I will try explaining things until I run out of options to explain it to the point that you understand. And that's really what it's about to me. I love all my clients. The ones who get the very best out of me have a relationship more than once a year for taxes. And that's what I think probably the key is. And so if you don't feel like you're getting what you need, you don't have maybe a good enough relationship with that person to do it or to get what you need. And so I'd say, at that point, maybe you look for more.
Okay.
So,
And this one ties directly into that.
Yep.
What should you expect from your accounting firm? And I know that one's a hard one because a lot of it's contractual.
Yeah, it's a big question.
But, tie into the baseline of that.
Yeah, I think the baseline is that you're getting your needs met and that you understand what, I have a lot of people come in that I do taxes for that probably really don't understand their taxes. They understand at some point the overview of their taxes. Some of them understand them well enough that they could probably do them themselves and just don't want to. But they understand the overview of their taxes and why things are the way they are. And if you can't get to the point that you don't get the why answered, then they're not meeting your expectations.
Okay. Do you use a mentor?
I have a couple business mentors. One I have monthly meetings with, some more often, and I have different ones for different things. I have a business mentor who works on the operations of the business and leadership side of the business that I try to follow and live up to. And I have another mentor who mentors me in my own numbers. I said earlier, I'm busy doing everybody else's numbers and don't watch mine probably as close as I should. And so, not that the mentor's telling me something I shouldn't already know, but he's making me take the time to look at what my numbers are doing. And so I have a mentor that helps me with numbers, a mentor that helps me with leadership. Jethro's been a mentor at different times and how to grow and different things to do, and we bounce ideas off each other, probably me more than him, but we bounce things off of each other, and how's this work, or how should I do that, or what do you think of this? And so I think definitely, when you get to a point when you realize I don't know it all, you'll be more successful. So
you fall into the column of yes, mentors are important.
I think they're important.
Okay. Yeah, and that's one of the things you learn as a business owner is you can't do it all yourself. So, You have mentors, so how did you find good ones?
How did I find good ones? I think it's more on value. So when you come to me for services, are you getting the value? Are you getting your why answered? And I think that's what it's come to with my mentors too. If you can help me talk through an employee problem at work and realize, okay, well, the problem that you're having there is because these things aren't in place. So this is the why. If we can together work through to the why, then that's a good mentor. If it's, somebody who's, formed a lot of businesses and run a lot of things and done it successfully, and they come in and they can say, well, you should do this, this, and this, and I don't get to the why, then maybe the value's not there for me. So I think it's really, are you getting what you need from that person?
Okay. How do you track trends in your profession? A lot of businesses, they fall flat on their face because they think if they keep doing everything exactly the way they're doing it now, they're going to be successful.
Mm-hmm.
How do you change with the times? How do you track that?
I look at my numbers pretty consistently, and I just got done saying I don't look at my numbers as much as I should. But I look at different numbers very consistently. I look at my month over month. I have a spreadsheet now. I told you earlier that I made this thermometer about when I was going to leave. Well, I have that same spreadsheet, which has become a lot more detailed, that says, here's my gains, here's my losses, here's my contract increases, and I have that going back to, I think 2014 is when I started it in this format, to say gains, losses, sales, how many I need to make my goal, what kind of clients are we adding, what are we losing, we lost a client, why? We gained a client, why? So it's really, again, getting back to the why. Why are we gaining? Why are we losing? Why did this one not fit our system? Why did this one fit so much better? But it all starts with being able to track those numbers and see what's going on.
Okay. I got one last one for you. The one I warned you about.
Oh.
So, the biggest question that came up the most times in every conversation is, how do I work, Uncle Sam, to maximize my income?
That's a good question. And I like it. To me, and I've started answering that question a little bit differently, and it's a big question, so this one might take a minute.
Of course it will.
To me, it's maximize, go ahead.
Remember, you're on camera, so.
Right. To me, it's maximize my income where? Okay. So if I decide, and some of my clients do, I don't want to pay taxes, and I want to go out and buy a new truck or a new machine or a new thing, great. We can do taxes that way. I understand that, and it makes sense. To me, it's that next step of, am I buying this thing to not pay taxes? Or am I buying it because I need it and it's going to do something for me in business? If the answer's over here that I need it and it's going to do something for me, or maybe I really, really just want one that bad, but it's going to be the last one for a while, that's okay. That's a smart decision. But often what I run into is businesses that have done that or run their income down to not pay taxes, and then they come in the next year and say, oh, well, now we want to buy a house. And the mortgage officer won't give us a loan because we don't show any income.
Yep.
Or the bigger thing that we've talked about already, something happens to Russ and my wife's left with nothing because I've run my business down and nobody wants to buy it. So to me, I don't love stroking a big old fat check every year to the IRS and to the state. I do it because I want my business to show the strength that it has. And that's probably the biggest thing to me is, do my taxes tell the story of my business and the strength that it has? Is it the business I built it to be? Writing a check for, $14,000 or $15,000 is not what I like to do. But if that's what I have to do to say, long-term, Jethro's gonna sell this for me and I can retire and go to the beach, or long-term, if something happens and I get hit by a semi on the way back to the office, Jethro's gonna sell it for me enough to cover all my bases, or long-term, I can grow it enough to have 8 employees and have all their families supported, or that's really where my passion starts coming in, is that's why I enjoy it and why I do it. So yes, paying the government isn't great, isn't fun. There are some things structurally, which we've already talked about, that we can do to limit that. There are some things, I can dump money into my retirement plan, but it's really having that end in mind and driving towards it, realizing, yeah, we're probably gonna pay some taxes along the way, but if it gets us to the end and we can be successful whenever that day comes. If I die in a car wreck and we're successful because my wife has sold the business for enough money that her and the kids are supported and she can go live in a cabana somewhere, great. If I can retire and do nothing, or come in and be the guy who drinks coffee and jokes around with the employees, we've reached that level or that mark that I had for success. And so that's really what it comes down to. There's all kinds of ways. There's write-offs to take advantage of that maybe you're not looking at. There's formation entities that you could take advantage of, maybe you're not looking at. There's retirement you could take advantage of, maybe you're not looking at. I can help you look at all of those things. None of that's important unless it's driving you to the end result you want.
Fantastic. Well, Russ, I want to thank you for coming on. I know we've been here, probably longer than any of us thought. Come in and ask me, are we going to break this up into multiple sections? Absolutely not. We are a one take, one video kind of operation here, because if something screws up now, we're starting over.
Right.
So I want to appreciate you coming in. It was fantastic. It was valuable information. For me, I've heard a lot of it before, and there's good points. I've never heard it all kind of put together like that. I hope it was valuable to our people out there. And, I want to thank all you guys taking time to watch this exceptionally long video. And if you have questions that I didn't ask him, that you would like me to ask him, hit it up in the comments, leave me a message. I'll feed it over to him. He'll throw me an answer, or he'll post in my comments, because he will be watching the video later. This video will get posted up on Monday. So when you're watching this, it'll be Monday. So happy Monday, and y'all have a great day.